Let's talk about our stock of the day, which is Reliance Worldwide, RWC. Let's check in on the share price today. We've got Stuart Crosby retiring as chair of the board with immediate effect. A company statement is citing health reasons. Mr. Crosby will be replaced by a non-executive director, Russell Chenyu, on an interim basis while the firm looks for a permanent replacement. So this is a sort of plumbing supplies firm. It is listed here in Australia, but its headquarters is actually in the US city of Atlanta. Is also in focus as the Trump administration says that housing stimulus measures are to come. An advisor to the US president has hinted that home buyers could be allowed to use their retirement savings toward down payments for their new homes. But we do as well have some company specific news for RWC as well in the form of a broker note coming out today. So that is coming from, just let me see, that is from Citi. So saying that Reliance Worldwide is set for a tough 12 months, saying that the market is underestimating the impact of the rise in copper prices on the business. As you know, we've been in a commodities sort of bull market with copper on COMEX about 3% higher. And an analyst at Citi says that historically, what goes through the P&L suggests that Reliance Worldwide is in for a tough 12 months. The structure of the industry also favors customers in the United States. So the quantum and speed of potential price rises represent a challenge to the company. So it's downgraded it to neutral, expecting both FY26 and FY27 consensus estimates are still too high. So that is Reliance Worldwide. Quite a lot of information to take in. David Lane from Ords, let's start with your view.
Reliance Worldwide is a very good business. They, as you mentioned, they are a global business. They've got operations in the US, the EU, and in Australia and New Zealand. I haven't read that Citi report, but interested about the comments about copper, because in some respects I actually see Reliance Worldwide as being a beneficiary of the strength in the copper price, because their main product is the shark bite, which is effectively using plastic or PVC piping in bathrooms. It's often referred to as behind the wall type fittings, where it's actually a replacement for copper. So I think with the high prices of copper, I would have thought that it should be a little bit of a beneficiary from that. Would be interested to see that Citi report. In terms of the news today from Stuart Crosby, he's been a very good chairman of the business, has been involved with Reliance Worldwide since pre-IPO, has done a very good job. So obviously, concerns for him and his health, and hope that his future is okay. But as far as Reliance Worldwide, we've got a hold recommendation on it, but it's starting to look interesting from a price point of view. They're down very low compared to where they've been over the last 12 months. We are starting to see some signs of an improvement in the US housing market and some improvements in sales there. So it's probably one of those stocks that has been under pressure over the last 2 years or so, but starting to look interesting again. Probably still have a hold on it. Its PE ratio is 23 times, but we are forecasting an improvement in their earnings, so that next year it should decrease to about 18 times. Probably one to keep on the watch list. I'd still have a hold on it at this stage, but starting to look interesting from a price point of view.
Thank you. What do you think, Jonathan? Reliance Worldwide, a few headwinds, and I do on that copper price. I mean, I'm no expert, but I remember, in the sort of COVID times when prices were rising exponentially as well, talking about their ability. I guess it's whether or not they can pass on some of those increased costs to their customers.
That's the main problem there. So Reliance Worldwide, if you zoom out, I've been looking at the US housing sector, and I always believe that price gets reflected in the stock market before real life. And what I saw sort of from about halfway through last year into the third quarter, a bit of a rally in, say, some of the housing-related stocks, the actual builders themselves. And I thought, okay, here we go. There's a bit of a recovery here. But that rally has teetered out and it's actually starting to fall now. And we're starting to see volumes taper off. So what you're seeing in the US is, and you mentioned it, it's the bond market. So while Trump is talking about cutting credit card rates and wants to help out his voter base so that he can get re-elected in the midterms, the bond markets is not playing ball. And what we're seeing there is that those mortgage rates aren't coming down over there. So I think that is a massive headwind into their markets there. Flow onto Reliance Worldwide is that just means that there'll be less building activity over there. And so I think that it's going to be a tough road ahead for them. And you've seen it in the share price. When the sort of housing stocks started to rally, Reliance Worldwide didn't catch a bid. It kind of just went sideways, and then now, with the tailwind, with the headwinds in there, and the bad news today, we're back down at the bottom end of the range. So it's an avoid for me. I wouldn't want to be in there. If we start to see a bit of recovery in the housing sector, I would have a look at it, but I'd want to see a few other leading indicators show me some signs, but I don't see that at the moment, unfortunately.
Well, wonderful. Thank you, guys. Slight difference of opinion there for Reliance Worldwide, an avoid or a sell for Jonathan Tacadena, but a hold maybe getting interesting for David Lane from Ord's.